Crypto Kids, I see a massive opportunity, and that opportunity I want to dive into in detail. It's about layer ones and tokenization. We touched upon tokenization a few videos ago, but today, Larry Fink spoke at Davos in Switzerland, and in this giants forum, the forum of the elites, he mentioned the importance of tokenization. And I'll go into a couple of very interesting data points from JP Morgan, going into the market share of where the tokenization is really happening and which coins I'm allocating capital into. Before we jump into that though, guys, we have some breaking news from President Trump. It's having a direct implication on the price of Bitcoin. So I want to run through Bitcoin, President Trump, and the monetary policy with you here on today's video. My name is Crypto Kid. I've been making content here on this channel for the past 4 years, almost on a daily basis. So subscribe. We're very close to 65,000 subscribers, and stay tuned by keeping your notification bells on and destroying the like button, guys. Yesterday you did something incredible. We hit 1,100 likes on a Bitcoin update video. You're fantastic. I don't remember ever achieving this many likes before on a Bitcoin update video. So please, if we can repeat that, that would be amazing. I don't know what I would think if we reached 1,200. That would be just sensational. So go ahead and do it. If you enjoy the video, obviously, if you don't enjoy it, you don't have to like it, but I'm pretty certain that you will. All right, let's get started with what President Trump has done over the past 24 hours and how it is going to impact Bitcoin and what I think is going to happen next. So firstly, President Trump had a meeting with the NATO Secretary General and stated that the tariffs against Greenland, well, not against Greenland, but against European countries will not go ahead. He planned 10% tariffs. He was going to increase them to 25%, remember, by June if Greenland was not given to him by that specific date. Following a conversation, they decided to not go ahead with these Greenland tariffs, and markets saw a little bit of a relief, but then corrected straight afterwards. Guys, there's still uncertainty about what Trump is going to do with the EU. He says that he may retaliate majorly if the European Union decides to sell American securities. Currently, the European Union holds about 2 to 3.6 trillion in American securities, mostly tied up in bonds. We know that Trump has to refinance 9.5 trillion in bonds this year, mostly in bonds. So if EU sells, that's going to create huge pressure for Trump's back. So I don't think he wants that to take place. And because we still have this fear and uncertainty regarding foreign policy, this is why markets still have not seen a recovery to the upside. One comment on the Greenland topic, I just don't understand why, following a conversation with the NATO Secretary General, they would come to a conclusion that, okay, we're getting closer to acquiring Greenland, because NATO or the Secretary General do not have the powers to give Greenland to America. You need the Danish approval to be able to do that transaction. So I don't understand why. Maybe it's just a narrative shift. I don't know. Maybe it's propaganda. We'll find out in the upcoming few days. We do know that President Trump does not want to give up on Greenland, but we also know that he can get rid of tariffs after he introduces them, and the narrative may change later on. So we'll find out. We'll have to remain patient and see. When it comes to Bitcoin, Bitcoin is still hovering around $89,500. We close the CME gap. If you missed out on yesterday's update video, we were calling for the CME gap closure on Bitcoin for at least now a week to 7 days. When everybody was bullish on Bitcoin at $97,000, we made a video saying a crash is coming. And honestly, I got a lot of interesting comments in the comment section of the video. I got a lot of interesting comments on Twitter, but that's okay. I'm here to share my personal transparent analysis regardless of the comments. Obviously good comments and good criticism I always welcome, but with this one particularly, I have a 97% chance of closing all CME gaps, and the one at 88.2 was no exception. People get sour because after you've seen a pump, you just don't want to go down. It is what it is. We've created another one though, and this time I don't think I'll get as much hate because the CME gap is to the upside, and it's taken place at $93,000. I think Bitcoin will come up to it, reclaim it eventually. The maximum amount of days it usually takes for CME gaps to close is around a month. So I'm giving Bitcoin earlier than a month because we're not really dumping so fast. If you're just in a consolidation, the gaps close sooner rather than later. So 93 should be expected from my perspective. In the short term, we have the Supreme Court ruling coming against President Trump's tariffs. I must admit, I was pretty scared about this one. There's currently a 70% chance, according to prediction markets, that President Trump's tariffs are going to be ruled as illegal by the Supreme Court. My expectation initially was that if we see that rule to be gone and set as illegal, markets would see a catastrophic dump. I no longer think this to be true. President Trump has stated that if Supreme Court goes against his tariffs, he will have other plans, plan B and a plan C in place, essentially, to exchange for tariffs. And I've done my homework, and there are very reasonable plan Bs and plan Cs to replace tariffs. So instead of seeing a huge breakdown on the bear flag, I think it's possible that Bitcoin still revisits the 200 daily moving average before seeing the more macro consolidation chop to the downside. If the tariffs are gone this week, he can just introduce something called quotas. Quotas are you just controlling the total amount of exports a country is making, let's say China's making to America. So instead of putting a levy or a taxation, which is a tariff, you can say, hey, China, instead of importing this many amount of technology products, we want you to now only export this many amount of technology products. It has the same impact as tariffs. It's just not a taxation, but it is a quota. And the executive branch of government, i.e. President Trump, has the ability to do that. So I'm not so concerned anymore. Maybe in the short term it caused a little bit of dump, but I don't think in the intermediate short term it should be too big of an issue. President Trump should have a solution for it. When we go to the S&P in the traditional markets, the Nasdaq, the S&P still look very concerning. You're seeing a repeat of what happened in the dot-com bubble in terms of the technical analysis. We're following the dot-com bubble-esque price action quite well, I would say. And if we see a rejection now at prior support turns into resistance, then I would be expecting a further drop on the S&P, which would cause a further drop on Bitcoin. But first, I want to see that CME gap closed. Let's not change the narrative. I want to see a retest of the 200 daily moving average. Then I want to see the macro lower chop to the downside. Speaking of the dot-com bubble in the 90s, President Trump stated that he wants a Fed chair like Alan Greenspan to replace Fed Chair Powell. Alan Greenspan was a Fed chair that was in position during the 90s and into the early 2000s. It kind of gives you a good sort of understanding on what he wants to happen in the economy. If you're not familiar with the 90s and 2000s price action, you had a huge boom in the 90s, and then in the 2000s, you got a huge bubble. This is the fundamental basis of Keynesian economics. You have big booms and then also huge busts. It's the boom and bust cycle. It's funneled by having very low interest rates that causes people to borrow at cheap costs, injected into the risk on and equities market. And then when you get so much debt built up in the system, eventually it implodes and it crashes all upon you and everything goes to the floor. It's horrible. It's terrible. And over time, you're building up debt and your money is losing value. The more you give away for free, quite frankly, at 0%, 1% interest rates, the less valuable your money becomes. So it's a big boom and bust cycle. President Trump wants to create another low interest rate environment so that he can take the current boom that's happening in the S&P and propel it so that in his term, in my opinion, he doesn't want a economic crash. He wants his term to be remembered as a good time in the economy. He oftentimes describes his first term as the greatest economic run in America. He wants the same for his second term. If we see the stock market crashing, then he won't be able to market that very well. And I think that's what he wants to do. That's why he wants to bring down interest rates. The executive branch of government historically does not and shouldn't, from my perspective, have control of monetary policy, which is the primary influence for markets, right? So he can appoint a new Fed chair because the Fed chair's term is up, but he cannot influence monetary policy. He states that he wants to bring in somebody that can bring rates to 1% to 2%, but I just don't think it makes sense. I'm seeing this image float around crypto Twitter a lot. People are pointing towards Trueflation, which is a more accurate aggregator of the actual inflation data compared to the US government, stating that inflation year on year is currently at 1.2%. Therefore, the Fed should be cutting rates. No, that's not how it works, okay? I'm going to read you what I wrote here in the CryptoKids free Telegram community, which I share data and analysis before I upload my videos. If you want to join, there's a free link in the description down below. It's just a place where I can share my thoughts when they come to me, and then I gather them in a video later on. It is linked in the description down below. Free to join. So here's what I said. The truth is the Fed does not need to cut rates. A Trueflation chart showing a lower, more accurate CPI estimate has been going viral on X. As a result, economists and politicians argue that because inflation is below 2%, the Fed should cut. Respectfully, that's not how it works, okay? The Fed operates under a dual mandate: maximize employment and maintain inflation around 2%. That's it. Fiscal policy, such as national debt, it is not the Fed's responsibility. With CPI at 2.7% and falling, unemployment declining, and trueflation claiming real inflation is closer to 1.2%, it just all points towards the Fed doing a very good job, right? Many people want you to cut interest rates because they want to continue funneling the current economic boom we have in the S&P 500. But what does that do? That adds to the debt, and that causes a bigger crash later on down the line, which would likely happen in the next president's term, not during Mr. Trump's presidency, okay? So many want to cut rates and extend the economic boom and allow also the government to refinance roughly 9.5 trillion in debt at cheaper costs, which they should do, but you cannot blame the Fed and you cannot put that onto the Fed because the Fed doesn't care about fiscal policy. It only cares about the dual mandate of inflation and unemployment. So don't put that on the Fed, okay? The Fed doesn't care. It's not the Fed's responsibility. Their only responsibility is monetary policy, and that doesn't include debt refinancing. So I don't think we're going to see dramatic rate cuts even when we get the new Fed chair, right? Maybe he'll have a slightly lower Fed dot plot projection. Remember, the Fed chair isn't the person that decides what the interest rate is going to be. The interest rate decision is made by a collection of 12 different Federal Open Market Committee members. And they come to a consensus and then they announce the interest rate. I don't see 1 to 2% interest rates, maybe the upper 2%, but most likely in the 3% is where we will sit. What does that mean for the economy in the broader sense? Well, honestly, we will get so many more different forms of economic stimuli. I'm not too concerned. Don't expect anything like 2020 and 2021, but going to 2027, I expect some sort of relief in the crypto markets and the altcoins gaining a spotlight. If you're concerned about what inflation really looks like, don't get so stuck up on this 1.2% reading. Okay, this is what real inflation is. 1.2% is the estimated inflation experienced just over the past year. Focus on the past 20 years. Focus on the past 15 years. This is what inflation really looks like. So the more money you print when you lower the rates, you're just going to make this worse. Don't focus on the 365 days. No. Focus on the past 20 years. Focus on the past 15 years. Focus on the past 10 years. That concludes President Trump, Bitcoin, and the economy. Let's go into the tokenization narrative. So 2 days ago, I created a video saying breaking news. This is huge. We talked about the New York Stock Exchange developing a 2.0 platform where they would do trading fully on-chain. All of their securities would be tokenized and put on-chain. We said this is good because it's going to cut speed of transaction, remove friction, create a democratization where more people can participate in finance, and that would be amazing for the layer ones, and it would be amazing for risk on assets overall when we talk about the macro. Just a day later or 2 days later, Blackrock CEO, the largest asset manager in the world, CEO Larry Fink, controls about $14 trillion in assets under management, said, "We must move rapidly with crypto tokenization and on a single common blockchain." He spoke about in front of the global elites that they need to tokenize. They need to tokenize. It's not the first time Larry Fink is talking about tokenization. He said it many times before, but there's an agenda to put everything on chain. It will reduce friction, reduce cost, increase GDP. It is a no-brainer. But the most important thing he said is that he wants to tokenize on a common single blockchain to reduce corruption. Now, everybody asked the question, okay, what is that blockchain going to be? And in my eyes, I think there's a strong chance it's either going to be a private blockchain, which will create a desire by the people for a public blockchain like Ethereum, because you can't trust private blockchains. Institutions can manipulate that. Or they will just go with Ethereum, and that's, again, good for Ethereum. So it's always good for Ethereum. The retail will not trust the private blockchain, so they will go with Ethereum. But if BlackRock adopts Ethereum themselves, then yeah, it's also good for Ethereum price action. We know that BlackRock has the Ethereum ETF, one of their most successful ever ETFs alongside the BlackRock Bitcoin ETF. We know they have it. They can capitalize on it. Even JP Morgan, the guys that hated crypto, thought it was a scam, mentioned that tokenization and blockchain will be used by all of us. They're the largest bank in the world, and they just created their own fund on Ethereum that has $100 million locked up already. I'm just seeing these facts, and it all points to me that Ethereum can see a huge explosion once liquidity comes back in. We've done the Ethereum technical analysis before. You guys know when the ISM shifts up, when there's liquidity and the economy goes into a boom, the price of Ethereum has historically gone towards the upside. I'm going to quickly find that chart again, but we know that just based off of the technicals alone, Ethereum should be doing very well in the macro. In the micro, I expect a correction to $1.9 thousand, and I think it will be a great buying opportunity. But when we speculate just on the macro alone, as soon as we see an economic expansion, the price of Ethereum from a technical standpoint should do really well. And then when we look into the fundamentals, that just secures that idea. It provides the backing evidence. Even JP Morgan, the guys most bearish on crypto, tied up $100 million onto the Ethereum blockchain. So I think that Ethereum has a big opportunity. I'm very excited about it. But apart from Ethereum, right, in terms of distributed, democratized blockchains, Ethereum is the market leader in tokenization. The narrative of, I would say, the next few years, when we look into that private blockchain element, where institutions are doing their own tokenization, just not on democratized blockchains, you see, right, from Ethereum's total $13 billion locked up to when you include privatized blockchains, a suspicious and interesting network called Canton pops up, where they have locked up $350 billion of value. That is 20x Ethereum. What the hell? You've probably never heard of it. And it's true. These guys are developing, they're an American company, they're developing private blockchain solutions for institutions. They say they work with the biggest guys. Check out their website, canton.network. They have their own native coin, and I don't see anybody talking about them. And I also think that Canton is looking to be a big opportunity. Again, nobody's talking about this. They have $350 billion of tokenization. They're supplying private blockchains. So if BlackRock decides to go with a private blockchain instead of Ethereum, this could potentially be your hedge against it. So Canton, I see to be another big opportunity, another big player. And then finally, Ondo Finance, a token that I've been speaking about for many, many months, and even I think years now on Twitter, on YouTube. Ondo Finance just launched over 200 tokenized stocks, ETFs, bonds, and commodities on Solana. So Ethereum is one, Canton is one, but I think Solana is three, right? I think Solana is going to do really well. They just saw a 400% surge of tokenized assets on Solana. That's massive. Ondo Finance, they had over $500 million already tokenized. Now it should be way, way more. In the past 24 hours, they have some good volume. They've tokenized a bunch of securities, a bunch of different stocks that you can buy as an on-chain investor. And I think Solana is another very good bet alongside the Ondo token itself. Check those out. It would be Ondo and then Solana as long-term investments that I am putting capital into. So Ondo, look, it hasn't even gone up in the past 24 hours. It's gone up only by 4.25%. It should be going up by 30% after this news, but it's not doing it. Solana also only up by 1.18%. I think Solana can go to $500 once liquidity comes back into the markets. And finally, guys, I think Chainlink is probably the most undervalued coin of them all. Chainlink, not many people know. It's down. It's only up 1.93% in the past 24 hours. When we look into the macro, it's down to low levels. You have a huge bullish pennant. Chainlink is the single project that's building the infrastructure of you being able to take data off-chain, Tesla stock, off-chain data, price action, and put it on-chain. It is the oracle. It is behind the success of stablecoins, the success of tokenization. The two big narratives going into the next few years. Chainlink is literally behind it. And the token is only down at $12 I think it's a fantastic opportunity from my eyes. And unlike 99% of crypto projects, the actual token contributes to the projects. It gives you a monetary incentive to run nodes and create that authenticity of the actual information that is bridged onto from off-chain to on-chain. So I think Chainlink is another big one. That wraps up today's video. I hope you enjoyed it. Again, if you learned something or if you enjoyed it, please, please, please don't be shy. Destroy the like button to make sure we spread this content to as many people out there. Become a Crypto Kid by subscribing. And if you're looking for a place to be trading Bitcoin and cryptocurrencies, I have links down in the description below. Thank you so much for watching. Have a great day, and I'll see you all on the next video very soon. Take care and bye-bye, guys.